The Indian stock market has outperformed major market in the world on a 3-year, 5 years and 10-year basis. The Nifty Large Cap Index has delivered a 10.9% return over the last 10 years. Here is the total full index full return of the major economics. You can see for 10 years India has returned 10.9%. For China, this number is 2.7%. For USA, this number is 6%. So India has outperformed both USA and China in 10 years return. For 5 years return, India has returned 18.8%, USA 6.9%, and China went to minus, which is minus 2.8%. Here also India outperformed both USA and China. In 3-year basis, India has returned 6.1%, while China has returned minus 6.2%, and USA has returned minus 0.9%. Now, India is the 5th largest stock market in the world with 3.31 trillion US dollar as market capitalization. But USA is the first with 44.54 trillion US dollar, and China ranked second with 10.26 trillion US dollar. Earlier this year, DSP Asset Manager in its Netra June 2023 report titled Early Signal Through Charts revealed that in the last 123 years, the Indian stock market has delivered a real return of 6.6%, which is higher than the return delivered by US and China stock market as well as the world equity markets. This means that India has compounded investors' wealth at 6.6% CAGR or compound annual growth rate, higher than USA, which is 6.4%, and China, it is 3.3%. From the year 1900, the CAGR shows real compound, which means it is adjusted for inflation and takes care of currency depreciation that happens over the years because of inflation. Now, what are the key factors behind the resilient performance by Indian stock market? So, first is the stable domestic macroeconomy. India's long period performance is a function of sound and stable domestic macroeconomic scenario, along with high real growth rate. India remains the fastest growing major economy of world and expected to be the third largest economy by 2027. Second, India's growth rate. India's GDP growth rate was over 7% in 2022-2023 and expected to remain over 6% in 2023-2024. Third, strong demographics. With a relatively young and growing population, India is poised to take competitive advantage as it would reach the highest working age population, that is aspirational, young and with increasing income levels by 2030. Fourth, sectoral growth. Sectoral growth was driven by automobiles, oil and gas, insurance, banks and capital goods. Slowdown was more pronounced in globally linked sectors like chemical, IT, metals, followed by low ticket consumption have been the major pain areas. Although India is 5th largest stock market in the world, the real retail investor in India is very less. Only 3% of total Indian household are actively investing in stock market. This number is different in USA, United Kingdom and China. In USA, the number is 55%. In United Kingdom, the number is 33%. And in China, it is 13%. So you can see that more people of these countries are investing in stock market than Indians.